Hi, my dear students. This is Raju sir, the subject of commerce. Right. I hope you all are good and doing good. Now, in this session, we are going to discuss about the topic of accounting principles. Okay, general accepted accounting principles. Okay, these are the major, the important basics for the further construction, the process of the accounting in the further classes. Okay, okay, my dear students, let's move to the topic. Right, this is been called as accounting principles. Accounting principles. So every commerce related and accountancy related basic accounting related student has to know about these principles properly before they are going to do any accountancy in the further. Okay, an accountant, suppose you are also accountants. Why? Because you are also now ready to going to make some accounts now. That's why you are also the accountants. That's why every accountant and the businessman has to know about these principles properly before he is going to do any accounts in his concerned business. Okay, right. Actually, accounting principles are divided here twice, two types. Accounting principles are two types. They are to be concepts and conventions. Concepts and conventions. Okay, these basics principles have to be followed while the transactions are recording in the books of accounts of the business. Okay, so what are the concepts and what are the conventions? It's nothing but it is the tradition and custom of accounting to be recorded in the proper books of the accountant and also to the businessman. So actually concepts are nothing but it is to be some rules of the accounting. Rules of the accounting has to be followed by an accountant during an accounting process. Okay, so what are the concepts and different types of concepts and what are the different types of conventions we discuss in the proper class. Okay, my dear students, yes, get ready. Actually, the concepts are divided here nearly 9 types. 9 types of convention concepts are to be there to record the business transactions in the accountancy books. Yes, those concepts are to be here. First one, business entity concept. Business entity concept. Next one, money measurement. Money measurement concept. Third one, cost concept. Fourth one, going concern concept. Going concern concept. And fifth one, realization concept. Realization concept. Sixth one, dual aspect concept. Dual aspect concept. Seventh one, accounting period concept. Accounting period concept. And eighth one is accural concept. Accural concept. And ninth one is matching concept. Yes, the accounting principles are broadly divided here twice, two types. This is has been concepts and conventions. Yes, what are the different types of conventions are here? Right. Convention of disclosure. Convention of disclosure. Convention of materiality. Next, convention of consistency. And the last one, convention of conservatism. Right. So these are the basic accounting principles has to be followed by an accountant during an accounting process. This has been divided as concepts and conventions. So in this session, we discuss about the concepts of the particular accounting principles. Okay, my dear students, let's we move to the concepts of accounting here. The first concept here, business entity concept. The first concept here, business entity concept. According to this concept, the business and the businessmen both are separate entities. Okay, business and entrepreneur is the separate. So means this particular concept is actually explains and states the information about while the accountant is recording the transactions in the books of account, he should be assuming that business is separate, owner is separate. Business is separate, owner is separate. Means owners and business transactions are should not be mixed and to be recorded in accountancy books. We have to record business transactions are separately, owners transactions are separate. When the accountant actually recording the transactions of the owner and the business separately, means he is following the concept of business entity concept. Actually, why this concept has to be followed? Because of to get accurate result of the business, to ascertain the true result of the business, means the accountant has to follow this concept properly. Yes, we take one example on this business entity concept. Actually, in accountancy, we already discussed in the last sessions about the two terms are to be playing some important role in accountancy. Yes, this has been called as capital and drawings. Yes, so means if you are recording capital and drawings in accountancy books, means indirectly we following the business entity concept. What is the meaning of capital? The capital is the amount which is given by the owner for starting the business. Means the owner is giving this capital to the business. While the owner is giving this amount to the business, record in accounting books as a capital. This means here we are assuming owner and business are separate because of owner is giving the money to the business for starting the business, for continue the business. Means the recording in accountancy books as a capital. Then at the same time, when the owner draw some amount or cash or goods from the business for his personal is called as the drawings. Means in this situation, the owner is using the cash or goods from the business. Means he is taking from the business. So while he is taking from the business, we recording in accounting books. Means as a drawings. So accountant, when he is recording capital and drawings in accountancy books, means nothing but we following the concept of business entity concept. So simply the business entity concept means the owner and the business are separate entities, and we should not mix the both transactions in accountancy books, and we have to record separately. That is the concept of business entity. Yes, let's we move to the second one. I hope you students all are understand about the business entity concept properly. Yes, let's we move to the second one, money measurement concept. Yes, what is the concept actually? Money measurement concept. Yes, money measurement concept means, as while the transactions are recording in accountancy books, every transaction, every event should be measured in money, monetary terms. Every transaction of the business should be recorded in accountancy books in monetary terms. Monetary terms means if any event or if any transaction, whatever it is, then it could be recorded in accountancy books in monetary terms only. Other than monetary terms, if anything is recorded in accountancy books, there is no use, and it is not possible to know about the profit or loss of the business accurately if the accountant or the businessman record the transactions unless monetary terms. Okay, means actually money measurement concept is nothing but in actually some kind of commodities are measured in different formations, like how it is. Suppose we take some example, petrol measured in liters, some kind of solids, okay, solids also liters, sorry, in kgs. Solids are measured in kgs, liquids are measured in liters, and some kind of cloth Material of cloth measured in meters. Okay, so petrol and solids, whatever it is in petrol is measured in liters, and the solids are measured in the kgs, and the liquids are measured in the liters. Some kind of the materials are measured in the meters. So if we recorded the liters, kgs, meters in accountancy books, there is no use. These liters are should be converting into the money, and the meters also should be converting into the money. The kgs also should be converting into the money. So after we converting into the money, then we record in accountancy books. That is been called as money measurement concept. Every transaction of the business should be measured in monetary terms. Other than monetary terms, if you record anything, any measurement in accountancy books, there is no use. So that is about money measurement. Means, yes, suppose you know the general idea. If any accountant is recorded 1,000 rupees, 2,000 rupees, 5,000 rupees, 500 rupees, 60,000 rupees, like this, means he is recording every transaction in the way of money, in the formation of money. That's why he is following he followed already the money measurement concept. Okay, right. That is about money measurement. Come down to third one, my dear students. So that is been cost concept. Right. What is the meaning of cost concept here? Let's see. Cost concept. According to this concept, every transaction should be recorded in accountancy books at cost. Yes, every transaction should be recorded in accountancy books at cost, not is priority value. The transaction should not be recorded in books, okay, as per its priority. We should record in proper account in the business accountancy books at cost only. Suppose how it is: furniture bought. Furniture is the asset which is important for the business. For it is business important is there. Furniture bought for 10,000. So we should record in accountancy books only 10,000. Machinery, yes, machinery is also important to the business. 50,000. So should be recorded in accountancy books only 50,000. Okay, so let me take some example here. Okay, classroom. College is maintaining the some accounts. Classroom is there. In the classroom, actually, blackboard is the part of the classroom, and furniture is also part of the classroom. Okay, for blackboard, the college is include the expenses here, 5,000 rupees spent for blackboard. Yes, for spent for actually blackboard, 5,000 rupees spent by the college for this blackboard in the class. And at the same time, for furniture like benches, yes, for students actually, for student convenience, actually they provided the furniture. Furniture cost is 50,000. Right. Okay, so the college is spent 5,000 rupees for blackboard and 50,000 rupees for furniture. Okay, accountant while he is recording these two transactions in accountancy books, he hasn't gotten some doubt. What is the doubt? Actually, blackboard the college has spent 5,000 rupees, and for furniture the actually college has spent 50,000. Yes, in this, which one is important? Which is the given the first priority? Yes, I think myself the blackboard is important than furniture. Yes, the students can sit on the floor, can stand and learn the classes. Other than, if only furniture without the blackboard, yes, the students cannot learn anything in the class. Means, to the point of view of the blackboard is the important than furniture. Then accountant is recorded in accountancy books, actually paid for furniture 50,000, but is assuming about the furniture. Furniture is not important, na? So furniture in accountancy books 5,000. And blackboard is most important, na? It is increase the value 50,000. This is completely mistake and wrong ideology of accounting. Actually, how much we paid for blackboard? 5,000. How much it is important to the classroom point of view? According to the college point of view, classroom point of view, how much it is important? We paid 5,000 rupees only, na? We should record in accountancy books also 5,000. And how actually the furniture is less than important for blackboard, now paid 50,000. We should record 50,000 properly in accountancy books. So that is about cost concept. Yes, we can take number of examples. Factory is there. In the factory, premises is there. The factory premises is useless unless the machinery. In the factories, the machineries are playing some important role. Factory premises is there. Factory premises is the 1 crore, but machinery is 50 lakhs rupees only. Unless the machinery, the factory premises are useless. So due to this, the factory we should write only 1 crore in the accountancy books. The machinery also we should record in accountancy books. Even they paid less than factory premises 50 lakhs, we should record in accountancy books. That is about cost concept. Means how much we pay for that, the particular asset or the transaction or the event. We should record that much of amount only in proper accountancy books. That has been called as cost concept. I hope you understand, my dear students. Let's move to the next one, going concern concept. Let's actually the meaning of going concern concept here. According to this concept, the businessman should maintain the accounts, assuming that the business continue for a long time. Any businessman, just you listen, my dear students, any businessman before he is going to start the business, he should assuming himself, he thought himself, yes, my business is continue for a long time. So that's why when he want to continue the business for a long time, he needs to maintain some accountancy books. Yes, why? Because when he want to continue the business for a long time, in the further situations, in a going process, actually he is able to differentiate the results of the business, compare the results of the business to the last year to current year, and last few years to current year. Actually able to compare if he maintain the account books properly in business. So that is based on going concern concept. Yes, suppose simply logic, in your point of view, the students point of view, I'm discussing here. Let's see, those students who want to continue regularity to the college, yes, they want to come to the college regularly. Those students, simply logic, yes, listen everyone, simply logic, those students who want to come to the college regularly, yes, actually regular students, what is their actually thought and intentions? Yes, we are regularly going to the college, so we have to maintain some class works for each and every subject, for economics, for commerce, for mathematics, everything. So they have to maintain some proper notes. Those students who do not want to regular to the college, actually no need. Yes, they oftenly come to the college nearly 10 days to 15 days, like that. So actually they no need to maintain any class works. So same, the actually psychology is applying here, going concern concept. Those businessmen who want to continue the business for a long time, they need to maintain some accountancy books. Those businessmen who do not want to continue the business for a long time, no need to maintain the accountancy books. That is the concept of going concern concept. Yes, any businessman intention is very clearly, before he's going to start the business, every businessman want to continue the business for a long time only. So that's why he needs to maintain the accounts to compare the results of his business, okay, itself, for the last few years to current year. What is the business performance? What is the business results? What is the graph of the business? Is able to compare if he follow the going concern concept. Yes. Okay, my dear students, let's we move to the next one, realization concept. Yes, the meaning of realization concept here is realization concept. According to this concept, imaginary profits should be ignored. Imaginary profits are not to be considered. Imaginary losses should be considered. Imaginary losses should be considered. Means anticipated profits are not to be considered. Anticipated losses should be considered according to this realization concept. And after you realize the incomes, after the transaction taken place into the business, then we records in accountancy books. Okay, so tomorrow we are going to sell the goods. Today we should not record in the accountancy books. Today we are going to receive tomorrow we are going to receive some amount from the customer. Today you should not write in the accountancy books. After it taken place into the business, happened into the business, then you record in accountancy books proper. That has been called as realization concept. And also, according to this concept, we should consider for all anticipated losses. Anticipated losses we should consider, but anticipated profits are not to be considered. Okay, means imaginary. Yes, imaginary profits are not to be considered. Imaginary losses should be considered according to this realization concept. Okay, I hope you understand this concept. And the same realization concept in conventions, convention of conservatism is also same. This convention, this concept, the both are give the same the meaning while he is maintaining the some accountancy books. Okay, that has been called as realization concept. According to this, as my dear students, imaginary profits are not to be considered, imaginary losses should be considered. Okay, my dear students, let's move to the next concept here. Dual aspect concept. Yes, this is the total accounting structure. Accounting process is been depending on dual aspect concept only. Yes. Further, whatever we are going to discuss about the accountancy, this has been completely depending on this proper dual aspect concept. What is this concept actually? Actually, according to this concept, every transaction of the business have two aspects. That has been receiving benefit and giving benefit. Giving benefit. In accountancy, the receiving benefit is called as debit, giving benefit is called as credit. So according to this concept, every transaction have the two aspects. Dual means two. So means aspects means two benefits. Every business transaction have the two benefits, which has been called as the receiving benefit and giving benefit. The receiving benefit is called as debit and giving benefit is called as credit. Okay, how it is? We take some example. As my dear students, this is the example. Means we have to record the both aspects in the books of accounts. We should record debit and also to the credit in accountancy books. How it is? Let's see. Purchased machinery. Yes, purchased machinery. This is the transaction, rupees 50,000. As the businessman who bought the machinery for rupees 50,000. In this, receiving benefit is there, giving benefit is there. This is the business transaction. Purchased machinery is the transaction which involved two benefits, receiving and giving. How it is, let's see. So when the businessman purchasing this machine is received by businessman, receiving benefit is called as debit. For purchasing this machinery, he is paying 50,000 rupees of cash. Cash is giving benefit is being called as credit. Means machinery has been debited, cash has been credited. As machinery is the receiving benefit, cash is the giving benefit. So that's right, machinery account has been debited and cash account has been credited. So this is the dual aspect concept. Every transaction, as we take only one example here. So we have number of transactions are part of the business. In every transaction have your receiving benefit and giving benefit. As the receiving benefit is called as the debit and giving benefit is been called as credit. That is about dual aspect concept. Okay, my dear students, let's move to the next one, accounting period concept. Yes. So what is the accounting period concept? Accounting period means the time of the maintain the accounts. Recording the accounts and maintenance of the accounts, we have the specified period of time according to the general accepted accounting principle, which is suggested that accounting period should be 12 months, which means 1 year. The businessman has to maintain and has to close the accounts every 1 year. Yes, the accountant has to close the accounts and find the results of the business for every 1 year. Yes. So these 12 months may be. Yes, we have the two actually accounting years. Accounting years are two. One is from January to December. Yes, some of the businessmen actually who started their accounting process from January 1st and closing on the December 31st. This is been called as calendar year. Calendar year. Calendar is begin from January and closing on December. And next accounting year is April 1st to March 31st. The accounting year has been closing. The accounting process is begin from April 1st and closing on March 31st. This has been called as financial year. Financial year. Okay, so these two accounting years are is there to record the transactions of the business. So that's why accounting period should be 12 months. These 12 months also have the two options are there with the businessman. One is he can go for January to December and other April 1st to March 31st. One is calendar year, one is financial year. So accounting period means the time, accounting time for every 12 months. Okay, the 12 months may be January to December and April to March. That has been accounting period concept. Next, accural concept. Yes, this is concept. According to this concept, actually, the accountancy books, especially the cash book, records the transactions, what we received and paid during the year. The amount which is belongs to the expenses, actually the expenses and incomes which is to be belonging to the last year and next year, whatever it is. The cash book is recorded properly, either if it is the receipt, record on debit side, if it is the payment, record on credit side, irrespective of the time. Irrespective of the time means, suppose some of the incomes which belongs to last year, we received in current year, but recorded in cash. And we paid some advance expenses for the next year. Yes, if we paid, we record in cash. But actually in accountancy books, it is not happened actually the expenses. We have to be paid in further. Suppose rent paid in advance, we take some example here. Rent paid in advance. Advance of 2023. 10,000 rupees paid. Actually rent paid, the expenses belongs to 2023. 10,000. So means this 10,000 rupees is belongs to 2023, but paid in current year. But in current year books also we have to be shown this amount now properly. So that's why this has been showing in accountancy books as an adjustment. Prepaid rent. Prepaid rent 10,000 means the expenses which belongs to next year but paid in current year. But we have to show in the accountancy books properly. Why? Because the 10,000 rupees is goes out from the business. So we have to show in the accountancy books prepaid rent 10,000 means the expenses which belongs to next year, but even we paid in the current year amount. That's why we have to show prepaid rent in accountancy books. Like this, if any expenses is been outstanding, suppose 10,000 rupees salary is been paid outstanding to one of the employee. He rendered the services of December. For the December, he rendered the services, the businessman has to pay